Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because it's a beautiful day to be a Bitcoin holder, especially now that we're seeing early signs of Bitcoin following our condensed cycle scenario. And of course, we're always open to various outcomes on this channel. We know that Bitcoin could have one last shakeout event at any time between now and the election. And there's always a non-zero chance of a black swan event that sends markets a lot lower, but it's hard to ignore the fact that Bitcoin has been slowly and steadily grinding higher over the past few weeks. And we know that Bitcoin's main use case is as a fiat currency debasement hedge, which is why we see such a clear correlation between Bitcoin and global liquidity, because as central banks around the world devalue their currency to stimulate growth in their economies and pay back their debt, that ends up increasing the price of valuable and fixed supply assets like Bitcoin, stocks, and real estate. And what do you know, we just got word in the last 24 hours that China's central bank finally released a slate of support measures for their struggling economy. They reduced the cost of borrowing, they reduced the amount of cash that banks need to keep on hand, which increases liquidity, and I'm sure they're going to offer other forms of stimulus to finally pull their economy out of the slump that it's been in. And the reason why this is so important is because the Chinese central bank was the last one holding off on doing this. We already know that the Federal Reserve cut their interest rates recently, and they're doing what they're calling a recalibration, which is really just a fancy way of them saying they're getting ready to embark on the next easing cycle, where they plan to reduce rates and perhaps go back to quantitative easing and buying bonds and putting it on their balance sheet. And we've seen very similar sentiment from the European Central Bank as they cut rates on September 12th, right before the Federal Reserve did. And finally, we have the Bank of Japan announcing they're going to keep rates level at 0.25%. So they have such a large amount of debt that they can't even raise their rates above 0.25%, and it wouldn't surprise me if they're going to embark on an easing cycle relatively soon as well, especially now that the other major central banks are doing so. So we know that anything can happen in the short term, but it's very hard to ignore the fact that we have the foremost pivotal central banks globally getting ready to embark on an easing cycle, while Bitcoin has been consolidating at its previous all-time high from 2021 for the past 6 months or so. And everybody is too busy arguing on whether we're going to have a recession or a market crash, or is this going to be the start of the golden bull run? And everybody is so focused on the short term that they're ignoring the big picture and what's likely going to happen over the next 6 to 12 months. And this is why we always talk about multiple scenarios on this channel. I am very open to Bitcoin having one large shakeout event, and I know that there can always be a huge black swan that ruins everything. But when I look at what the central banks around the world are doing, I think it's very likely that we see a new all-time high for Bitcoin within the next 6 months or so. The hard part is just not messing things up by buying altcoin number 562 and losing all your money there, or perhaps getting greedy because of how good things look in the medium term and losing your money getting liquidated by trading leverage using your favorite influencer's referral link. But I do think things are looking quite nice in the short term as long as Bitcoin can hold above that pivotal 61.5K level that has been our range low going all the way back to March of this year. As long as we're not closing weekly candles below it, I have to remain cautiously optimistic. And we know markets are forward-looking, and the market knows that MicroStrategy has raised hundreds of millions of dollars to buy Bitcoin, and they've only deployed about half of that money so far. So I would be shocked if the market ended up giving Michael Saylor a discount by selling off before he deploys that capital. And I apply that exact same logic to the money that's going to get given back to the FTX creditors. We know that if the market knows $16 billion in cash is going to be given back to these people that bought crypto on FTX, and these people were able to hold their crypto all the way down to the bear market lows when they were already down 70 to 90% depending on the asset, the market is very unlikely to give them a huge discount when they get that cash and have the ability to buy in at lower prices. What usually happens is the market rallies until that event everybody buys in higher, and then perhaps we see the correction. But of course, we're going to have to monitor that as time progresses and as we approach those creditors getting their money back. And it's still surreal to me that we finally have regulatory clarity in the US for Bitcoin now that two of the largest asset managers, BlackRock and Fidelity, have so much Bitcoin in holdings. And we also have MicroStrategy, which is a publicly traded US company, holding a ton of Bitcoin as well. We're also seeing BlackRock advertising Bitcoin to their advisors, and I think this will only escalate if we see Bitcoin start to rally. And we also know that we have options finally coming around the corner, which makes it a lot easier for larger institutions to hedge their risk and exposure by buying options to protect their holdings in those Bitcoin ETFs. So definitely something that we're going to be keeping an eye on as those options go live. So I remain incredibly optimistic in the medium term. Of course, anything can happen in the short term. We're still not quite complete with the Bitcoin summer seasonality chop fest that we've been going through. I mean, Bitcoin has been almost perfectly flat since we talked about entering summer in the beginning of June and where we find ourselves today towards the end of September. And it's nice to see that Bitcoin is just following what it usually does during these summers outside of those post-halving years of 2017 and 2021. And the fact that we're just following that this time around gives me more hope that we're going to see a rally once summer is finally behind us and this 6 months of reaccumulation finally breaks out. And that aligns very nicely with the seasonality we've seen for October historically. This tends to be a very good month for Bitcoin, so I wouldn't expect this time to be any different, especially with all the sideways chop that we've seen. And we do know that the election is still remaining close, and this is perhaps the main reason why I'm not a lot more bullish in the short term than I could be, because I still think a lot of shenanigans can happen between now and the deadline in 42 days. So I'm remaining cautiously optimistic until we officially have our winner and this election uncertainty is behind us. As for the S&P 500, still nothing to worry about as long as we're trading above that previous all-time high and as long as we're still in price discovery. Close back below that level and we can start talking about major short-term concerns. But as of right now, as long as we're closing above that breakout, really no reason to be concerned in the short term. And we know the S&P 500 being in price discovery is an absolute requirement for Bitcoin breaking out as well. We need the S&P 500 to be rallying for larger investors to be comfortable going out on the risk curve and buying something like Bitcoin. And especially now that those spot ETFs exist, people can just allocate to Bitcoin right within their brokerage using profits from their stock investments or any money they have on those exchanges, which probably only increases Bitcoin's correlation with the S&P 500 over time. And I still think it's possible for Bitcoin to test those high 40,000s if we were to see some type of surprise with the election that spooks markets or causes some major uncertainty. But as of right now, we don't have to go that low. And I still think we're very comfortably within this fair value range that Bitcoin has been in for the past 8 months or so. And until we actually exit this region and break out higher, we can't get too overly euphoric in the short term. And I'm not interested in buying any Bitcoin unless Bitcoin re-enters the undervalued region, because I'm quite happy with the position that I already have. As for monetary policy, the market is still expecting a 50 basis point rate cut from the Federal Reserve in the November meeting, but a lot can change between now and then. This meeting is still about 6 weeks away. And I know there's still a ton of people that are saying that rate cuts are a sign that the markets are going to crash soon because of what we saw in 07 and 01, and they're expecting something similar this time around. But something many people leave out is that the Fed wasn't even doing QE in 2001 or in 2007. That was something that was invented post 2008. So I think comparing the current market climate to those time periods doesn't really give you the full picture. because the Fed now uses their balance sheet to lower rates and make debt cheaper and stimulate the economy. As for the US dollar index, which has a very strong inverse correlation with Bitcoin, so we really want to see it get devalued aggressively if Bitcoin is going to enter its mania phase, and we're finally going to get the alt season that everybody has been waiting for months now. We knew that the US dollar index was likely going to bounce at this level, and it's been holding above it for almost 6 weeks now. But now that we've seen that bounce and it's getting closer and closer to breaking that support, this is definitely something to watch as the Fed continues to cut rates and embark on their next easing cycle. A clear break through that level would probably be the catalyst Bitcoin needs to truly enter price discovery. And speaking of price discovery, let's talk about something that's always in price discovery: US government debt, which continues to grind higher. And we're seeing US M2 money supply slowly starting to tick up as well as the Fed gets ready to embark on their next easing cycle. And this is likely why we've seen the price action from the S&P 500 that we've seen over the past few decades, as currency has been getting devalued slowly over time. And we see a very clear relationship between the S&P 500 and the US national debt. And based on what we're seeing this year with the $1.9 trillion deficit the federal government has run so far, doesn't seem like this train is slowing down anytime soon. And we're seeing these record deficits outside of a recession while economic growth is still positive. And as long as the federal government keeps issuing this debt so aggressively, it's going to have to get monetized eventually. And that's going to continue to devalue the dollar and appreciate the value of Bitcoin, stocks, real estate, and other valuable fixed supply assets. Looking forward at our economic data, our leading indicator for the unemployment rate, initial jobless claims, which is a really clean representation of layoffs, has actually been going down over the past few prints and is still way below our June 2023 cycle high and very far below our recession start average at about 360,000 initial jobless claims per week. So really no major concerning signs in the labor market. And we're seeing something very similar with continuing jobless claims as well, which is a proxy I like to use for the number of unemployed people. We're down at about 1.8 million. Recessions historically have started closer to 2.6 million. So no major signs of concern there. And of course, we'll continue to monitor the unemployment rate closely. It did tick down on the last print from 4.3 to 4.2, but this is a metric that can start to pick up momentum very aggressively once it breaks out. So hopefully we see it roll over and not go up too aggressively. And perhaps what we're seeing from continuing and initial jobless claims are early signs that we're not going to see too steep of an increase in the unemployment rate. As for inflation, we did see a small uptick recently ever since the Federal Reserve announced they were going to cut rates by 50 basis points. Our year-over-year change is 1.4%, so really nothing to worry about. And I do think core PCE will continue going down and following in the footsteps of this Trueflation index. So nothing really to watch for inflation as of right now, but we will monitor this very closely because inflation resurging could be incredibly detrimental for markets. And finally, if we look at growth estimates by looking at the GDP Now estimate from the Atlanta Fed, they're expecting just under 3% growth, and I believe the Fed's target is 2%. And if we look at the past few quarters, all of that deficit spending by the federal government is keeping growth alive and keeping this economy afloat, and they're letting the currency devalue to do so. So no major warning signs in growth quite yet. Inflation looks okay based on leading indicators, and the labor market looks okay as well. Of course, these things can change, and that's why we always monitor the data closely, but I don't see any huge warning signs as of right now. So I remain optimistic on Bitcoin in the short term. I'm open to us breaking out higher from here. I'm open to us having that one last shakeout. But as of right now, we're following that condensed cycle scenario quite closely. And perhaps now that everybody has gotten bored and given up hope, Bitcoin is going to surprise them with a rally in the short term that baits a lot more people into this market and gets all of that FTX creditor money and then perhaps we roll over and see a correction after that. But of course, we'll have to monitor that going forward and take it one day at a time. But with what I'm seeing around the world from all of these major central banks like China, the Fed, the ECB, and the BOJ, I feel very comfortable holding Bitcoin for the medium to long term as these central banks continue to devalue their currencies. But anyway, let me know what you expect. Which cycle scenario do you think is the most likely? And as always, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.